Unmute the mic. Yeah. Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life. Today we're going to be talking about, well, primarily Morgan Stanley is finally catching up to the whole GPU demand versus the merge and proof of stake in a downturn of a market. So we're going to get their opinion on the availability of GPUs. We're going to be talking about Shiba Inu rising by 48%. Of course, is it really? We'll kind of go over that because that's an interesting one. You got to be careful with these tokens, boys. Goldman Sachs is to buy Celsius assets. And then we also have crypto hedge fund managers and traders are shorting Tether now, USDT. This is probably the biggest news that we need to chat about this week. And then we have a few other things here. We have a GeForce GTX 1630 GPU supposed to launch here on June 28th. We're going to get the information on that. We have a new listing for Kaspa on a new decentralized exchange, supposedly, x.vite.net. We have Kucoin finally re-enabling mainnet Ergo. And then we have a smart pool payout reference guide for GetBlock. So if you guys were curious about how that's functioning, we have an entire nice little blog here from GetBlock on how it functions. And then we have Team Black Miner version 1.65. Lots of fun stuff. Be sure to hit the like. Remember, super chat or super stickers are the best for the algorithm. Sharing out the stream is the best for the channel. And I hope that you guys enjoy today's show right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. All right, welcome back. So it was a pretty slow weekend, at least compared to last weekend for cryptocurrency news. The big news, obviously, all this week was being kind of focused very, very heavily on things happening in U.S. politics, which means it was also extremely hard for me to find all the information as it pertains to cryptocurrency news, but that's okay. We found some stuff. As always, we talk about miner releases first, and we only have one new one. It's Team Black Miner version 1.65. They added an option to locate VertHash data file. They improved the speed for AMD and VertHash, and they fixed the API hash rate for VertHash. Lots of stuff's been going on with miners and VertHash lately. It may be something we want to re-look at some point. I haven't seen huge numbers as far as like increase in profitability or anything from VertHash, or really any huge announcements that would make me think it's headed anywhere, but it's important to pay attention to nonetheless. We do have pool updates as well. I try to keep those going too for you guys, and what we have is a smart pool payout reference to give you guys a kind of the rundown on Ergo and its smart pools. Hopefully you'll get a better idea on how those payment confirmations are working, so you're more comfortable with it if you are over mining like Neta or Comet on one of their smart pools. So here you go. They posted this on June 26th. And it goes, currently payments are processed after 20 confirmations from the block find. This is typically less than 1 hour or shortly after 20 confirmations for the block find. Here's a note. As we are continually improving our code, currently all subpools process payments in batches of 5 blocks. This means that payments are not initiated until 5 blocks are found by a partner subpool before payment is processed. This will be changed in upcoming code releases. Now, the reason they did that, to my knowledge, was because of the paused payments that happened not this weekend, but last weekend. They had basically an entire couple days where no payments were happening. They were trying to catch out on payment processing, so they basically upped it to 5 blocks. Now, I think this is translating into slower payouts now. And looking at my mining profitability, which we will be here in a bit, it does seem to be kind of all over the place, very difficult to track. But let's continue on. The image below shows the different stages and sequences for a found block under get block smart pool payment. So you have validating first, right? Block has been submitted to the node, blockchain, or node block or blockchain, and is awaiting a check to see whether it ended up on chain or is an orphan. You have the confirming. The block has been found on chain and is awaiting 20 confirmations before moving to the next stage. You have confirmed, which block has received 20 confirmations. Effort for the block has been calculated now, and their notification bot has sent a message out to the miners about it. Pre-processed. Block has had its share calculated, and an estimate of unconfirmed balances have been made. That's where basically this comes in, unconfirmed balance down here, right? So to give you guys an idea of what that looks like. Processing. Block has been sent to the smart contracts, and they are awaiting confirmation of the transactions to finalize balances. Processed is the transaction which sent the block to the smart contracts has been confirmed, and unconfirmed balances have been finalized. It says some of our subpools require that we interact with external exchanges such as Ergo DEX. Unconfirmed balances may change. And that is because, like for the example in Neta, they have to utilize, I don't know if Neta necessarily, I know Comet does, but they have to interact by sending it out and basically confirming it or with a smart contract in the case of Neta, but confirming the price still with the DEX, right? So they'll come in, they'll confirm the price with DEX and then pump it back out. So it's kind of how that's going. Initiated is initial payments have been made and are awaiting confirmation of these transactions on chain. And then paid is all payment transactions have been confirmed on chain. Miners have received their assets in their wallet. Payment earnings and confirmed balances are also updated at this point. To help understand how smart contracts based payments processing occurs, the following is a breakdown of the sequence. We just went over the sequence, and they say if you believe a payment is in error or you're experiencing abnormally delayed payments, please contact them below. You can use Telegram, Discord support, or email. I have noticed they will offer support on Twitter as well. They've been pretty good about it. They have been very cordial in their explanation as well, because I've seen some pretty harsh tweets that go out to them. And having been a pool operator before, I understand how stressful that can be, especially like in the case of a couple weeks ago when they went down. Now, Ergo was also experiencing post EIP 27 and the upgrade a deposit and withdrawal problem on Kucoin, but that has been resolved as of today, I believe at 3:33 a.m. So you can now do deposits and withdrawals on Ergo, on Kucoin, for Ergo on Kucoin. And so that was actually a video I was working on last week. You know, we did the how to liquidate your flux video, and I was working on the Ergo one, but then we had the downtime for Kucoin. And while there are other exchanges for Ergo, on stateside is pretty much Kucoin or nothing. So we'll be covering that for you guys as I'm able to get that how-to out. A few other how-tos. I know people want recovery, of course, for the ZIL Core wallet, and there's a lot of other ones that I'm working on too. We have 2 cases in for the farm from Octominer, so we will probably be doing some rig reconfigurations as well this week, so stay tuned for that. Now, Kaspa is a optical proof of work coin that has been one that I speculative mined before it was listed on any exchanges. Then it became listed on like TextBit, for example, and a couple others. It did just get another listing. And now this exchange, I'm not fully aware of. I haven't heard of this before. So I want to be clear that I'm not saying go here necessarily. I don't have a referral code. I haven't utilized this exchange yet. It apparently has some sort of KYC, at the very least, some sort of email, because there is a login option. I don't know if it's to the extent of TradeOgre or to the extent of TextBit, right? So TradeOgre, for example, email, password, you can enable 2FA, nothing else needed, right? You can just go trade on TradeOgre. So I really like TradeOgre for that. They don't have any referral codes, anything like that. In the case of this one in particular, x.vite, essentially what you have is some sort of login mechanism. But like I said, I haven't done it. It looks like you log in, you can import words for a wallet, which is interesting. And then they have Vite Connect and then a ledger device. So this looks interesting, a little bit more decentralized. It doesn't look like it's necessarily making you even sign up with an email. I'm going to go through the process and try to figure it out. Regardless, though, you do have the listing of Kaspa over here now with a pairing to USDT. So if you're looking for another place to trade Kaspa, there is another option now. Obviously, for projects like this, they're going to be on smaller exchanges, but it's always good to start seeing them get listed more and more often, because that's kind of the path of these smaller coins. Now, with a bear market, obviously, I wouldn't expect that you would want to sell any Kaspa at this time. Me personally, I'm just holding it all. But the pricing is getting pretty good. You know, it's keeps kind of ticking up here and there. It had its huge increase in prices for a while. It's settled back down for the most part, right? Let's go ahead and take a look at the price history for you guys on CoinMarketCap, because it did get listed. It's up 5% today. It's actually selling for more on this exchange than it is on TextBit, as you can see here, 0.0003 versus the 0.0004. So this is another thing that I always point out with these smaller cap coins that are just getting listed and so on. If you have access to multiple exchanges in your geographical location, make sure you're checking the price of all exchanges before you're liquidating any of your mining assets, because that's going to be important. It did have its initial spike, right? And now it's kind of settled back down, kind of sitting right around this 0.003 to 0.004 range. And I think it'll sit there probably for the bull run if I had to take a bet. And the only listing that CoinMarketCap supports is TextBit. So that's the only one that's going to be here. But the volume's gotten pretty good, right? The volume's at 83,000 on TextBit alone. So not too bad compared to even like some of the other smaller coins that have gotten listed on TextBit, like we talked about last week, which was the Proof of Game one. I'm slipping the name, but that only had like 4,000 worth of volume. So just an announcement there as far as like if you're looking for another place to sell it. We have an announcement now for the GTX 1634 gigabyte card. It's supposed to launch on June 28th for $150 US. This is coming from WCCF Tech. NVIDIA is soon going to launch its GeForce GTX 1634 gigabyte graphics card, an entry-level solution designed for the $150 US segment. Previously rumored to launch on the 15th of June, the graphics card is now set to launch on the 28th of June or next Tuesday. Hey, I'll see you next Tuesday. There we go. Based on reports from Chinese board channels, the GTX 1630 is currently being shipped to retailers around the globe and should have enough stock for the mass market at the time of its launch. The graphics card is also set to be priced at 1,000 RMB, which is 30 RMB cheaper than the Intel Arc 8380 graphics card, though the latter offers higher performance. Colorful Graphics Card Factory issued the latest notice that the GTX 1630 series models will be shipped soon, reminding branches and agents to pay attention to the delivery time. It is expected that the factory will be able to ship from this weekend or early next, but there is no official announcement to lift the ban. It is expected that the official sales will be allowed around June 28th, subject to the official notice from NVIDIA. The 1,000 RMB price should end up around 150 US dollars, and it is possible that we might even get a lower price point in other regions. The GTX 1630 is mostly designed for the OEM and entry-level segment, and that's where most of the shipments will be made. We have seen DIY solutions in ITX and small form factor flavors already over here. The NVIDIA GeForce GTX 1630 is expected to utilize a cut-down TU117 GPU with 512 CUDA cores, lower than the 1650 model, obviously, which offers 896 CUDA cores. The card will also pack 4 gigabytes of 64-bit memory bus, a huge cut down from the 128-bit bus that the TU117 GPU has at its disposal. So obviously for mining, what you're looking at is basically less performance than 1650 at this point, so it might not be something that you're necessarily super interested in from the mining perspective. Unless, of course, it comes in at a significantly lower price point. The GTX 1063 gigabyte would probably even be better on the used market as they start hitting them. Speaking of, I got to get my 1063 gigabyte rig back online. So that's something I've been looking for a bit. All right. So here's an interesting one. More Celsius news. Goldman Sachs leading investor group to buy Celsius assets. And this one's coming from CoinDesk. The Wall Street firm is seeking $2 billion in commitments from investors to buy distressed assets at steep discounts if the crypto lender goes bankrupt. Goldman Sachs is looking to raise $2 billion from investors to buy up distressed assets from troubled crypto lender Celsius, according to two people familiar with the matter. The proposed deal would allow investors to buy up Celsius assets at potentially big discounts in the event of a bankruptcy filing, the people said. Goldman Sachs appears to be gauging interest in soliciting commitments from Web3 crypto funds specializing in distressed assets and traditional financial institutions with ample cash on hand, according to a person familiar with the situation. The assets, most likely cryptocurrencies, have been sold on the cheap, would then likely be managed by participants in the fundraising push. Celsius has tapped restructuring advisor firm Alvarez & Marsal, the Wall Street Journal reported Friday afternoon. Goldman Sachs did not respond to a request for comment. Celsius, which had more than $8 billion lent out to clients and $12 billion in assets under management as of May this year, abruptly announced on June 12th that it would stop withdrawals from its platform, citing extreme market conditions. The disclosure exacerbated those conditions, briefly sending Bitcoin's price below 20,000 US dollars. In addition to hiring Alvarez & Marsal, Celsius has tapped restructuring attorneys from law firm Akin, Gump, Strauss, Hauer, and Feld, the Wall Street Journal reported earlier this month. Global investment bank Citigroup has also been enlisted by Celsius to advise on possible solutions, including an assessment of an offer from rival crypto lender Nexo, the Block reported. Citigroup and Akin Gump have both recommended Celsius file for bankruptcy, according to people familiar with the matter. Citigroup declined to comment. Akin Gump did not immediately respond to a request for comment. Celsius raised $750 million from investors last year, including Canada's second largest pension fund, and that was valuing the business at $3.25 billion US dollars. Now, if we took a look at Celsius, because there is the Celsius short, I did want to bring this up as well. It has gone back down. Remember, I think it was at 20 cents, and then there was a movement that started that was going to be like the Celsius short squeeze. And that was based on the fact that most of it, like 85% of it, was locked up in Celsius itself. Some people on an exchange, FTX, put in shorts on the 15% remaining that were in the public market. And then the community, the Celsians, decided to start a short squeeze. So they started purchasing up all of the available Celsius token, which was the ERC20 token. You can check out my video on that, on those details, of course. And they took the price from 20 cents to like $1.20, essentially. And then at this point, it's come back down. I think like at the top, I'm wrong. The very top was $1.50, and then it's come back down. So at this point, I think it's down to 75 cents or something along those lines, even lower, right? Well, 74 cents or so. And this is kind of where the short squeeze is at. Now, it is successful to a certain extent because it is all getting pulled out of FTX, to my understanding. So at this point, if we look at the total volume for FTX, it's down to 6 million. And I believe the goal was to get down below 11 million to stop the shorts. The idea is that they're going to send it all to decentralized exchanges, which I support that portion of it. But of course, what are you doing? You're protecting a centralized entity's token by removing it from another centralized entity, which is just kind of silly in the first place. But I understand the point of view from the Celsians themselves. I kind of get the point of like protecting the people that did invest in it, even though obviously on this channel, we're very adamant about not investing in projects like those. That is where it's at. Other projects, other tokens that are interesting. Shiba Inu, which is a token on the ERC20 blockchain, has rose by 48% in value since the weekend before a sell-off, this morning. So let's get into this. Shiba Inu's native SHIB token rose by nearly half its value in the past week as crypto market investors showed irrational exuberance amid a brief rally among majors. SHIB rose to the crazy 0.00001 mark on Wednesday from obviously this mark level last weekend, posting a maximum gain of nearly 48% for investors as per CoinGecko data. A large part of the jump came Tuesday amid a relief rally in Bitcoin and other major cryptocurrencies. The token then did fall to a lower level at the time of writing as traders took profits amid a slowdown among majors. Price charts suggest support higher than the previous low, or higher than before the pump, and resistance in above the pump, right, in case of further bounce. It's hard. I apologize for people just listening, but these numbers are fractions upon fractions of a penny. However, SHIB is down 89% from its lifetime high, which was reached in October of last year. The token had a market capitalization of over 5.5 billion at press time. Analysts said speculative frenzy drove SHIB prices instead of being a strong fundamental driven move. And that's important because what we start to see with these meme tokens are things that drive them completely separate and kind of disjointed from any sort of fundamentals. And that does put them in a position where they kind of have this advantage of not being tied to fundamentals, but also a significant disadvantage, because if you're investing in one of these things, you have to realize that the potential to go to zero is there. And that is especially true with something like SHIB. Recently, bias suggests to investors that a bottom has been formed with Bitcoin and Ethereum this past weekend, and then the market may be poised for a short-term recovery. Product manager at D-Hedge told CoinDesk in a Telegram message. This kind of sentiment brings back confidence in speculators, which, because of the absence of utility, SHIB attracts speculation, he added. Kate, the co-founder of risk management platform Apostro, seconded the sentiment. Quote, the reasons for Shiba Inu's latest growth are somewhat hard to explain and come with no observable link, end quote, she said. While retail investors might have been accumulating the token on optimism that Musk's erratic tweet in the not too distant future will stir growth of the digital asset, thus translating to gains in the long run. Tesla CEO Musk is an infamous Dogecoin proponent and reiterated his liking for the meme coin earlier this week, saying, quote, I keep supporting Dogecoin, end quote, he said, as reported, adding that he was continuing to buy the token. Some of this week's gains on SHIB came as developers behind the prominent meme coin ecosystem released a proposal last Sunday that suggested changes to how ecosystem token Bone was used on ShibaSwap platform. Bone, a governance token and main token emitted as yield rewards, would be used as fees to perform an action on the upcoming Shiba Inu protocol, a layer 2 protocol atop Shiba Inu that would support native app deployment and development. That could be interesting. Meanwhile, Ripple founder Brad Garlinghouse put the speculative nature of meme coins like Doge and SHIB in focus during an appearance at the Point Zero Forum in Switzerland on Wednesday. I wanted to point out that, in my opinion, SHIB and Doge are completely different animals, even though they're named after the same animal, primarily due to the fact that, like, Dogecoin is a proof of work coin and it's on its own chain, as to where SHIB is basically built on top of Ethereum. But that doesn't mean, I guess, that you would say from the meme coin perspective that SHIB and Doge aren't similar in their potential to go up and down, right? I would just, well, on the downside, I would say Dogecoin has less of a likelihood of going to zero due to the fact that it has its security built in and it's easy to secure thanks to merge mining with Litecoin. And that is pretty much how it works. Like, there's this weird factor where, because of merge mining, essentially Dogecoin does have really, really high security, and definitely the highest security for a meme coin, right? Quote, I have publicly said I think the vast majority of tokens will go away over a period of time because I can't figure out the utility, end quote, Garlinghouse said. There's some that were created a little bit as rhetorical sarcastic. There we go. Wow. Dogecoin is a clear example of it was never designed with utility. The founders have left the project. It moves based on the tweets of Elon Musk. This is purely speculative. I don't think it's healthy for the crypto market. Actually, I kind of think that is healthy. I always say this thing like, there is no other, there is not another Bitcoin, because Bitcoin's the only cryptocurrency that doesn't have a people problem, meaning it doesn't have devs in control of the chain, and consensus is handled by miners, as well as governance is handled by miners. So changes to the chain and all that are kind of moved in that direction. But then I look at Dogecoin and I see like a lot of the founders have left, or the founders have left the project, that sort of thing. And I go, wouldn't it be funny if the only other thing that is similar to Bitcoin would be Dogecoin, just because of the nature of its founding, right? And that's kind of a silly thought to have, but I'm just going to place that little seed and then listen to you guys in the comment section in the live chat. Do you think Dogecoin is the closest thing to Bitcoin, other than, of course, right, the supply? But from a people perspective, and maybe it is, right? I did want to show you guys, though, this chart for SHIB, because you got to be careful and always go and look at the charts when you read these things, because it's like, okay, it went up. All right, well, we see the little pump here. The 1 day is not looking good. We look at the 7 day. Oh, wow, that looks really, really good, right? We zoom out to a month, though, and our top was over here, and then it's the same top here, right? So over the month, it hasn't really gone up, and over the 3 month, it's consistently gone down, right? Over the year, consistently gone down. So zoom out on these charts, realize that these short-term gains are, not necessarily indicative of new highs or anything like that, right? So that's kind of where you're at as far as Shiba goes. All right, so as you guys know, Ethereum is poised to move proof of stake. Today, we're supposed to get all the nodes upgraded for the Glacier upgrade. For the uninitiated, the Glacier upgrade will essentially move the difficulty bomb for Ethereum to go off at a later date. It's resetting it, essentially. I think it will be going off, but it's resetting it, kind of getting a delay, and it's going to have the same difficulty that it had on the 15th of this month in mid-September. This means that profitability should go up, or revenue should go up on mining Ethereum directly. However, we are worried about the move to proof of stake and the merge and no longer having any mining. And some of these large companies are finally starting to get it. So Morgan Stanley wanted to come out and talk about GPU demand and how it's going to slow down if Ethereum moves to proof of stake, which is kind of already happening, right? And it's not dependent on Ethereum moving proof of stake. It's dependent on the markets being down, and the price of electricity going up, right? That's essentially what it is. Costs going up, revenue going down. That's what's happening. So from their perspective, though, if Ethereum moves to proof of stake as planned, it will remove the need for miners, slow demand for graphics processing units, and dramatically reduce energy requirements, Morgan Stanley said in a report on Monday. Ethereum developers are hoping that the merge will happen by September and potentially as early as August. But given previous delays, it would not be surprising if this were pushed out to early next year, the report said. The crypto mining has had a massive impact on the gaming graphics market in the past 18 months, the bank said, driving an estimated 14% of revenue in 2021, but at the same time, substantially contributing to a major graphics shortage, which boosted overall mix and pricing. GPU demand should slow, but NVIDIA is exposed to cryptocurrency mining demand that it was in 2017 to 2019, the note said. In addition, demand from crypto mining, which contributed to a shortage of graphics cards, started winding down in the first half of the year, the bank noted. Both NVIDIA and AMD have argued that they have minimized the downside scenarios from crypto. But Morgan Stanley is of the view that there will be a correction lower in gaming GPUs in the first quarter of next year. This will be due to a combination of factors, including lower demand due to the reduction in working from home, cryptocurrency migration to proof of stake, and tough sequential comps after a channel inventory rebuild in 2022, it added. What does this mean for us? Because this is what does this mean for cryptocurrency miners? Because I keep getting the question of should you buy, are we at the low for GPUs? Should you be buying GPUs right now? And clearly, if we look at the big market makers and what they're saying, what he's saying here right now is the lows for GPU pricing, right? Where you would buy at the bottom would be early next year in 2023. So when you ask me that question, I can point you to what the experts say here as far as when the GPU market will be at its lowest. And the thoughts are in 2023. That would align up with the release of new GPUs like the 4000 series from NVIDIA and the 7000 series from AMD, meaning like a compound of new GPUs coming onto the market, old GPUs getting liquidated by large mining farms that are not going to try to continue to mine. And that should provide a good opportunity for, people that want to remain mining, especially GPU mining, to hop in. Potentially, not financial advice, and everything could go to zero, and you could have some GPUs not worth anything, of course. Ethereum miners will most likely sell their used GPU equipment after the merge, as it is currently not profitable for all these computers to mine other currencies, the bank said, adding that net Ether supply is expected to fall after the merge and may even turn contractionary, so it is unlikely that the miners become stakers. And that is very true. Moving to proof of stake will not solve Ethereum's scaling problems. Oh, thank you. Thank you. Thank you for acknowledging that finally. Dear Lord. Such as the number of transactions per second or result in lower transaction fees, the report added. Hey, Morgan Stanley, look at you guys figuring it out over there. What does the merge not do? It doesn't improve scalability. It doesn't reduce fees. And all it does is pay out the people that are providing security to the network less money. That's all it really does. But it doesn't pass those savings on to you. No, good sir. It passes those savings on to the developers and the stakers. Welcome to Ethereum 2.0. It feels good when you finally have someone acknowledge what's really happening, because we've been reporting on this all year, And as you guys are aware, nobody has been reporting on it correctly from that perspective. So Morgan Stanley is a surprising one to come out and really actually state, yo, this isn't doing the good things that we want to do. But speaking more on graphics cards, there's been a huge attack on basically GPU miners reselling their equipment from various outlets, primarily led by TechRadar. And they posted one day ago on Sunday, yet another opinion piece, I guess, at this point, where, you know, it's a follow-up to the articles we covered last week of don't buy used mining GPUs. There are, you know, dead memory modules. Okay, fair, right? There are dead fans. Okay, fair. That sort of thing. It's not worth the price decrease because you don't know what you're getting. I kind of disagree there. I think that there are a lot of intelligent people that can figure out if they are buying a bad GPU from a miner or a good GPU from a miner. Let's get into this opinion piece. Detroit Irish shared it over on Twitter, and it's interesting. Opinion: the best time to stop crypto mining was 2009. The second best time is now. Wait, hold on. So we're going to ignore two huge bull runs. We're just going to ignore those, right? Some of the biggest times for basically the middle class to purchase an asset that was affordable to generate revenue. We're just going to ignore that, right? Okay. This is going to be a fun opinion piece, huh? There are two things that are guaranteed to get you hate mail in this business: being a woman online with an opinion and criticizing crypto. We're really going to play victim here. Really hardcore, boys. They got to play that victim card. They can't base this off merit or fact, boys. They got to just go, boom, let's start it off with the wokeism. Let's start it off with playing the victim. Dear Lord. All right, okay. I can't tell you. That's how you're going to open this up? All right. Okay. You know what? I think women talking in crypto have had some of the most respect out of any industry. And if we talk about tech, we have some of the greatest. We have one of the greatest female CEOs in Lisa Su of AMD. So as far as women within both of these industries, I think that they're highly respected. And that is my position based on those factors. And as far as women's opinions in cryptocurrency, they are very highly valued in very many different aspects. Maybe not necessarily directly in the mining scene, but hopefully we get some more more women in mining, because that would be great. The piece I wrote earlier this week, dissuading readers from buying a used graphics card right now, seems to have hit a nerve with many in the crypto community, and it was utterly predictable. With crypto miners buying up all the best graphics card to endlessly run Ether hashing algorithms, there's been nary a GPU for many of gamers out there, even to the point that NVIDIA was forced to implement new software and hardware tricks to try to limit the hash rate of their graphics cards to make more supply available to gamers who were left out in the cold. Even that effort was stymied by crypto miners hell-bent on easy money at the expense of the environment. Oof, we're hitting all of it, boys. So now the crypto bubble has popped and everyone is scrambling to sell graphics cards. I'm not. They spent thousands of dollars on an attempt to break even. Some did not, take kindly to my suggestion that the best possible outcome is that crypto miners get absolutely soaked. Again, understandable. But as FDR once said, they are unanimous in their hate for me, according to my DMs and inbox, and I welcome their hatred. Okay. So, TechRadar is a consumer product site, and our focus here is to make sure that everything you buy is the best purchase for you. A used graphics card just isn't a good purchase right now. I said so, and I have no interest in making it easier for a lot of shady crypto miners to sell their worn out GPUs by holding my tongue on this. My interest is our entire readership, and given current inflation and cost of living issues, a lot of readers might be tempted to buy a used RTX 3080. I advise them that they might be buying a lemon and that there's no way to tell a good card from a bad one. Yeah, there is. You bring your computer with you and you plug the card into the computer, and then you pull up a GPU Z and you take a look and make sure that all of the statistics are there. The amount of memory that's supposed to be in the card, the size of the memory bus. You make sure that the fans are all spinning. You make sure that you run some benchmarks and that they get a comparable benchmark score that you would see online. That's how you test it. It's called testing, and whenever I buy a graphics card, these are things that I look at too. This isn't rocket science. Given the nature of the crypto space, there are a lot of ne'er-do-wells out there who will happily sell someone's card on its last leg while wrapping it up like it's brand new. 6 months to a year from now, when the card craps out, the seller will be long gone and there's no getting that money back. In a lot of these cases, though, you will still have some sort of RMA option, especially if they provided the box with it and the information on the sales. It's not really hard to RMA these things either, especially with more stock coming in, right? That reader is out serious money, and now they have to buy another card. Like I said, not necessarily. RMAs are still usually within warranty, especially given the newer releases like the 3000 series and 6000 series. Sorry, my interest is in helping the reader not get screwed, and I will not apologize for that. Nobody wants you to apologize for that portion. We just might disagree on some of the nuanced factors and points, just to be clear. As for all your criticisms, let's go over some of the highlights. Is it okay to buy a used GPU? So this is the number one complaint I've been getting about a piece I wrote, and I'll address this one right up front. Buying used isn't a bad idea in the least bit normally, but right now it's a risky purchase. In any secondhand market, there is going to be some percentage of lemons, defective items in the mix with perfectly good and reasonably priced products and equipment. This goes for everything from a used MacBook to a used car. Graphics cards are no different, and normally it would be just a matter of doing proper research and buying from reputable sources, particularly if a card is refurbished and comes with some kind of additional commercial guarantee from the seller. But these are not normal times. The market is currently being inundated with graphics cards whose quality is unknown, with no way to really assess whether the price you're paying is a fair price. There's also a lot of competition right now among sellers, more so than normal, to get you to buy their card over someone else's. So they have every incentive to lie to you or obfuscate the condition of the graphics card so that you'll buy it. That's always kind of been the case, but all right. If you can't afford to buy a card in new condition, buying a used one is a totally legitimate way to get the equipment you need. I'd even say looking into buying a used GPU later this year once people start upgrading to the next gen cards and want to recoup some of the cost on a 2-year-old RTX 3070. Now, if we look at the reports from Morgan Stanley and we take a look at the GPU pricing and when it's going to hit the lows and when most miners are going to be selling, we're talking about after the merge of Ethereum. So if you want to consider that, whoever's writing this opinion piece from Tech Radar, if the argument is that you would be purchasing it after the release of the 4000 series, I think that's when a majority of the actual crypto mined cards are going to come onto the market, right? Because Ethereum's going to go proof of stake. It's going to be the merge, etc. So just if you want to think about that portion here, that might be helpful for you. But buying right now, I wouldn't, and I wouldn't recommend anyone else do so either. You simply can't tell the amount of internal wear on these cards. Yes, you can. And you don't know how much useful life they have left in them. There are no odometers. I mean, you're going to be able to tell. Like I said, you plug it in, you check GPU Z, you make sure that everything is functioning properly, and it's golden. You also have the opportunity to refurbish your card, which, I mean, if there's somebody that's struggling to purchase a graphics card, they get the opportunity to also learn how the graphics card functions, how to service them, and can actually set themselves up to actually just be able to participate within tech at a higher level. I know right now, for example, like we have YouTubers that are already, Tech Yes City, for example, starting to buy these up and refurb them. And that's what he does all the time, right? So this is something he always waits for, is like Tech Yes City will come out and basically start refurbishing all these crypto mining GPUs, and he'll sell them, right? And he actually just had a video released 2 hours ago. So I want to bring this up. And TechYes said is an awesome dude. So go subscribe to him if you guys haven't before. But buying up used GPUs finally under MSRP. And he does these PC part hunts. He refurbishes them and he sells them for a living. This is an opportunity. Even if you aren't participating in crypto, this is an opportunity to get into the industry and start generating some income for yourself. This is a good thing. There's higher than normal chance that you're going to spend a lot of money on a card that won't last nearly as long as you expect, given the price you're paying for it. Ultimately, you may end up spending a lot more money in the long run, maybe even more than if you just bought a new one or a more expensive card. Well, that would be if the card was completely defective and you didn't get an RMA and then you went ahead and just threw it in the trash and bought a brand new one without even attempting to fix it. Yes, you can buy a burnout graphics card with crypto mining. So he's got this picture of an old GPU catching on fire. Look at that. The PCI slots are backwards. What slots are those, guys? One thing several crypto complainers have messaged me is to argue that crypto mining has been proven to not damage these graphics cards. They say poppycock. Here's the deal. Any use of computer equipment in high temperatures can damage the cards. There are safety measures that you take to try to reduce this probability, and the same thing goes with processors and everything else. And like I've also stated, I don't think that you would want to buy a used card that was using any kind of copper modification because it puts undue stress on the PCB. That being said, most crypto miners are keeping a better eye on the actual health of the card than a lot of the gamers. And that is just kind of like because their revenue is tied directly to it. I spent years studying computer science, they go on to say, including computer architecture, and GPUs aren't made of pixie dust and rainbows. They're made of physical silicon with lithographed transistors and other nanoscopic components whose width are measurable in numbers of atoms. An electrical current passing through that silicon gradually changed the character and physical structures of these components. I think it'd also be important to point out that Gamers Nexus revealed the power issues with the RTX 3000 series, and that may be a larger issue than the actual process of mining on the 3000 series GPUs. I wanted to point out that as well. Because I think that's significant here. As transistors get smaller and smaller, these sometimes quantum level effects matter more and more as the transistors are that much more sensitive to owing to their size. And that is, like, once again, the reason I brought up the Gamers Nexus reveal on those power spikes that we're seeing. All right, so since crypto miners want hard evidence of this phenomenon, here's a peer review article called Asymmetric Aging Effect on Modern Microprocessors from the engineering journal Microelectronics Reliability that you can read to gain some insight on how electronics break down over time with use. And all things break down with time, with use over time. That is true. They're not incorrect. Or you can Google transistor aging and read any number of dozens of engineering papers on the topic. For all those out there claiming that graphics cards should last more than a decade, the automotive and healthcare industries have the most stringent reliability demands of any microprocess consumer, and the chips are rated for 10 to 15 years of reliable service before they start to fail. Graphics cards are nowhere near that level. It is simply the case that the more and or longer electrical current passes through a transistor, the quicker it fails. This is basic electrical engineering. This isn't shilling for graphics cards makers. It's just reality. Graphics cards aren't singularities freed from the constraints of chemistry and physics. Any claim that constant crypto mining doesn't wear out a graphics card over time is either spoken out of ignorance or duplicity. It is going to be extended a lot longer, though, than say like a year, right, on the 3000 series. And we still have Polaris GPUs that are mining away just fine right now too. So constant is going to, we've talked about this before, where it primarily affects it is not the memory modules. Where it primarily affects it is the core. And this is why moving to algorithms with higher core requirements, Ravencoin, Flux, that sort of thing, is going to cause faster degradation, primarily because of the quick increase in heat and the quick decrease in heat. This can be obviously kind of lessened. The damage on those, like on the cores, can be lessened if you set up some sort of fan system that's going to allow you to turn the GPUs off, or when they shut down, you still have some sort of high powered, CFM going across the board to bring that temperature down a little bit more steadily, right? As opposed to spiking it. That's when you start getting core degradation. And that is pretty much how that functions. And that is more going to be, like I said, on the core problem, because the memory modules are typically more robust. Now, I will say GDDR6 is more robust than GDDR6X. So if we were looking at that, an RTX 3070 used would, in theory, be a better bet than an RTX 3080. Okay, so that's kind of like the lowdown as far as all that goes. But core degradation is going to be more common than memory degradation. If tens of thousands want to be hardcore PC gamers bought up all the graphics cards, abused the hell out of them, and then tried to sell them on the secondhand market for any significant fraction of MSRP, I'd be sending gamers into rage this week instead of miners by telling readers that they can't trust those cards either. And so maybe now it's best time to buy a used card. What about if that gamer played Amazon's New World, right? I mean, these things happen over there too. I'm just saying. But the market isn't being flooded with graphics cards from gamers whose PC maintenance practices are entirely unknown. So the kind of damage gamers are doing to these cards is at best tangentially relevant to this conversation. No, we're dealing with the glut of mining cards right now, many of them coming from mining farms where they've been locked up in a warehouse with hundreds of other cards grinding out ether for over a year. Do some warehouses have proper AC ventilation and maintenance? Sure. Do all of them? No. Is the card you're buying coming from the former warehouse or the latter? Have you checked? Is it even possible to check? Miners swear that they take better care of their cards than gamers. I'm sure a lot of miners do, but are you negotiating with that kind of miner when you buy those used graphics cards, or are you buying from a miner who is desperate to break even on a crappy investment, who doesn't know what they're doing and has been running their cards in an enclosed box with no ventilation and no cleaning for a year and a half at full voltage? I'd be surprised if any miner's running full voltage, but okay. The crypto bubble just burst. Who do you think is out there right now selling their used mining cards? They totally swear they are totally fine and absolutely worth a significant fraction of a new card's MSRP. All right, but Linus Tech Tips proves that mining doesn't degrade graphics cards, so you're just an NVIDIA shill, which doesn't, okay. Anyways, welcome to the internet. First, I never claimed that mining degrades performance. You can reread the original piece to check if you like it, and then, okay. The cards Linus Tech Tips tested came from a miner who, assuming these cards were actually used to mine as claimed, took exceptionally good care of their cards. He even points out that if the card's cooler is clogged up and dirty, then the entire performance demo he just showed goes out the window, and you absolutely can get performance degradation of 10% or more, which goes beyond even what I have been saying. Before you say, well, just clean the card's coolers and repaste, I'm more interested in the damage done to the card from all the dust and poor maintenance, which is again something that is easy to disguise when purchasing a used card, and how much that damage has reduced the useful life of the card. I don't care about performance. So when you're talking about that usually that's due to a couple of events, right? Like singular events that cause the highest degradation. Once again, that event is if you spike the heat and then immediately shut down any cooling, and you shut down the card right away, and it doesn't have time to basically spin down properly. This is why ASIC miners like Bitmain, if you turn them off, the fans continue to spin. This is why it prevents this type of damage. So it's not like it's a singular constant event. Typically, it's a singular spiked event. This is why I think you would probably see this more on RTX 3000 series cards, once again, referencing Gamers Nexus, than you would see them on, say, a 20 series card. All right, so I don't care about performance. I care about whether our readers are paying too high prices for cards they're thinking will last 3 years, only to find out they last 2 or even 1. I don't think that that's the way that will function, personally. But they care about how long until the card stops working, period. Finally, he says that in his opinion, if you find a card for half price with like new performance, YOLO it and buy another card if the first one dies. My point was and still is that you cannot know how long that card will continue to operate before it simply stops working, what he calls the binary condition of the card. It's not even that far into the video. Cards crapping out on you is first discussed at the 215 mark and is mentioned several times throughout. Fast forward to 904 and watch where he says that the remaining lifespan of the GPU before it reaches that binary doesn't work state could be major concern as well when judging whether to buy a used card at any given price. The only disagreement I have with the video is that most people simply cannot YOLO a $300 graphics card, much less than a $600 one. But this video was made in 2021 before we got hit with global inflation cost of living crisis, so I'll give them a pass on that point. As it stands for our readers, our readers might only have enough money for one graphics card to purchase, and that card needs to last them years. We want them to get the best graphics card for their money. I do not care if it's from AMD or NVIDIA or whether it's from Asus, Palette, Galaxy, Gigabyte, or whatever. Well, if you claim to be servicing your readers, you should care whether it comes from AMD or NVIDIA and which third-party manufacturer is building them. As we've discovered, as crypto miners, we utilize a lot of cards, and they are not one-to-one. An EVGA for the Win 3 RTX 3090 is significantly more reliable and will last you longer, a lot longer than a PNY RTX 3090, and this is due to the construction. So, if you care about the longevity of the GPU for your readers, you should definitely give a damn about the actual third-party manufacturer you suggest to purchase, and you should be testing them all. So that would be poor journalism, and your argument is moot at this point because you've just contradicted yourself. You should definitely care. I don't care if it's used. I don't care if it's new. I only care that our readers don't get screwed and that there are a lot of shady miners selling graphics cards on the secondhand market right now. If you pay half the price for a used RTX 3090, how do you know that you will get half of the usable life out of it when you buy it? If it lasts 5 to 6+ years, you struck gold. If it lasts a year, you got screwed. You'll never know until it dies, and by that point, good luck getting your money back. I wouldn't buy any RTX 3090s on the used market primarily due to their construction, which I'm saying that now because I did buy 9 of them on the used market. This is exactly what I'm warning against. So to many new crypto friends out there who barely read or didn't read my piece at all, we just read it all live. So there you go. Go back and reread what I actually said, and please check the sources you cite that prove I'm an NVIDIA shill before sending them to like you're hitting with something for draw 4 on. All right, we get it. More complaining. It's nearly 2 years since the release of the, let's see. They've already lost 1 generation. You've lost 2 generations, technically, if we can do the previous bull run too. It's been nearly 2 years since the release of the 3080, and outside of those who bought some of the best gaming PCs with pre-installed RTX cards and tech journalists who have labs with review units on the shelves, no one I know has been able to get their hands on one of these cards, and not for lack of trying. I know a lot of gamers that got them, but that's just me. The entire NVIDIA Ampere lineup has more or less passed right over the heads of gamers everywhere, not to mention researchers who use GPUs to cure cancer and the like. This has engineering. I don't know that word. I got to look that one up. A lot of. I'm going to Google this one. My dummy. Engender. Okay. That's where it comes from. Engendering. There we go. Okay. Welcome to live, boys. Where'd we go? Why'd we lose this one? All right. A lot of bitterness and disappointment for far, far more of our readership than a couple dozen crypto miners who have messaged or emailed me to complain that I'm being harsh. I've heard from parents trying to upgrade their kids' gaming PC with even the best cheap graphics card like the RTX 2060 who have been completely unable to do so. I've heard of people who saved up for months to buy a 3080, finally upgrade their gaming rigs only to have their purchases get bought out from underneath them because they can't make an online purchase quicker than a scalper's bot. I've spoken to gamers who have spent an entire night online outside of Manhattan Best Buy hoping to get a graphics card, and they could barely afford, only to get pushed out of the way by line cutters who were only there to buy the card that they could resell it on eBay to a crypto miner for twice the MSRP. Crypto miners have spent as much as $15 billion on GPUs during the crypto bubble, and all the wealth they generated has been almost completely erased from the market because fake internet money is still fake internet money at the end of the day. Oh, that's where we're going with this. The entire exercise was pointless except for the few who rode the bubble on the way up and got off at the top, essentially sucking up the bank balances from the latecomers who bought in at the top and have now lost everything on the way down. No value has been created unless you value a warmer, more inhospitable planet. Oh my God. And those miners who are deep in the red are desperate to make good on the gimmick they are literally bought into with actual real pay the rent money. So he goes on to say that later this year, NVIDIA Lovelace and RDNA 3 are expected to launch. If the gods are generous, crypto will stay in the crater it's currently in, and the next generation of graphics card will be much more available and cheaper until 2024 and 2025. And before you message me about proof of stake in Ethereum, if it's not Ether, it will just be some other DA meme coin, meme coin, or NFT project that needs a high hash rate, so miss me with that. One way to help all this is to disincentivize crypto miners from even thinking about buying a Lovelace or RDNA 3 card for the mining purposes later this year. The best way to do that is to not bail them out now that crypto has crashed and mining isn't profitable. They have perfect graphics cards as it is, so let them use those cards. And if crypto is the future, then those cards should be perfectly serviceable for the needs once crypto recovers, so they will be eager. So why are they eager to sell them? Or maybe a lot of miners just need to sell those graphics cards in order to either break even or make a profit because they recognize that crypto is a scam. No, it's just cyclical. It's part of the... whatever. All right. So there you go. Scam and might never recover, and they're left holding a bag that would really rather not be holding. Which do you think is more likely? For 2 years, nothing about this entire graphics card market has been in gamers' control, but finally this one thing is. It hasn't been in anybody's control really, but all right. You don't have to make the whole crypto miners who mocked you on Twitter when you complained about not being able to buy a new graphics card. All those miners who showed their stacks of RTX boxes with hashtags like to the moon crypto and deal with it, and have ETH in their bios, as well as a lot of them now need you to make this whole thing worthwhile for them. I don't think that any time on this channel that we have ever done that, and I don't know who he's referring to here because I haven't seen that either. Enjoy this moment, fellow gamers. Treat these used up graphics cards like they were EA loot boxes and slam the door in their faces, he says. Maybe miners will learn that crypto mining doesn't pay and they give it up for good. Not only will refusing to buy these cards now help restore the graphics card market to sanity going forward, it'll also give us a better shot at averting the worst effects of the climate crisis if we can convince more people to give up on crypto mining or never take it up in the first place. Alrighty, there we go. There's that opinion piece. That is a fun one. So obviously, it went through all of the FUD topics. So it attacked the environment, which GPU mining is like a fraction of the environmental damage that's being done. Tech Radar with its hosting probably does more environmental damage on its data centers, just saying, than the GPU market in general. He would want to target specifically Bitcoin mining, but that's not really a problem because that doesn't necessarily affect him from his point of view because it's all the GPUs. I would point out that it does, probably to a greater extent due to specifically silicon production, especially as Intel starts jumping into that game. And then it just goes on to basically try to say essentially that cryptocurrency is going to die out. I'm going to remind you that this all happened before. In fact, all of these anti-crypto GPU mining articles also happened before. I will remind you that the exact same GPU market thing happened before as well, meaning that they had a surplus of GPUs and the prices came crashing down. It's cyclical. It will happen again. And to think that it will not happen again puts you in a poor position to actually respond to the market properly. And that's whether you're a gamer or not. Personally, I'm a gamer as well as a crypto miner. And you have to take into account that this will be something that sticks around for a while. And GPU mining will stick around as well because regardless of the top cryptocurrencies using GPU mining, you will always have GPU mining to start up a lot of coins because it offers the most fair distribution of your coins. So that is going to stick around. I'm sorry to let you know that. When I set up arguments, I always like to point out that it's very, very important to not hit any fallacies. It's very important to not try to use victimhood to set up your arguments. And those were the primary arguments surrounding there. I think it got a little bit better when we were talking about the degradation of the GPUs. And like I've stated before, like that is going to be a problem. I think it's primarily on the core, not on the memory modules personally. And I do think it's more likely with like the RTX 3000 series than it is with like an RX 6000 series. And I do think that there are other power problems coming into play there. As far as the 4000 series goes, as mentioned, as well as RDNA 3, I think RDNA 3 will probably be good for cryptocurrency mining. We are still waiting on the exact specifications on power. I do not think the RTX 4000 series will be where you want to head. Now we have one final thing to go over today. This is a big one. Crypto hedge funds traders short Tether after UST's implosion. The positions are worth at least hundreds of millions of dollars in notional value, one trader said. Crypto-focused hedge funds are increasingly shorting US dollar-pegged stablecoin Tether amid a bleak market outlook nearly a month after the implosion of Terra USD, Wall Street Journal said in a report on Monday. Quote, there has been a real spike in interest from traditional hedge funds who are taking a look at Tether and looking to short it, end quote, Leon Marshall, head of institutional sales at Genesis, said in the statement. Marshall added that the positions were worth at least hundreds of millions of dollars. Genesis and CoinDesk are independent subsidiaries of Digital Currency Group. Genesis said short positions increased after the multi-billion-dollar implosion of UST prices of the algorithmically controlled stablecoin plunged to a few pennies in late May, causing contagion risks damaged within the crypto space that affected prominent crypto lenders and trading funds. Some funds are shorting USDT as a bet on broader economy as the U.S. Federal Reserve raises interest rates to curb a 40-year high inflation. Others are concerned about the quality of assets backing Tether, as per Wall Street Journal. Stablecoins like Tether are backed by fiat currencies and equivalent asset investments such as commercial paper, bank deposits, bonds, gold, cryptocurrencies, and per issuer Tether Global. And cryptocurrencies as per Tether Global. The stablecoin market has taken a hit since UST's implosion in May, with investors redeeming huge amounts of USDT in mid-June. All right, hold on, guys. Let me get rid of this real quick. I thought I had all this stuff turned off. All right. So, and then the doorbell rings. This is just a crazy day, boys. Give me 1 second. We're going to finish this in just a tad. about that, guys. I have basically one of the neighborhood kids was coming by to play with my son, but they're down doing a water slide with another group, so I was trying to get them connected up. So there you go. Let's get this going, though. Welcome to the summer, right? Summer fun. So first, just real quick on this entire subject, I wouldn't short Tether because it is not an algorithmically backed stablecoin, and it is backed, as they say here, by fiat currencies in the equivalent. So it's kind of crazy that that's how they have that somebody would take out a position like this. The stablecoin market has taken a hit since UST's implosion in May, with investors redeeming huge amounts of USDT. In mid-June, investors pulled some 1.7 billion from Tether in a week alone, as reported. Tether's global market capitalization has fallen over 20 billion since mid-May, CoinGecko data shows. Funds like Fear Tree Partners and Viceroy Research LLC have previously bet against Tether, citing opacity about the asset's actual backing and the lack of audited reserves. Tether officials, however, denied such risks exist. In June, Tether said rumors of its portfolio being 85% backed by Chinese or Asian commercial paper were completely false and likely perpetuated by those looking to generate additional profits from an already stressed market. In April, a Tether spokesperson told MarketWatch that the short sellers seemed to be involved in a clever scheme to raise capital from those less knowledgeable by leveraging on disinformation with the end goal of collecting a management fee. And that's what it sounds like to me as well. Should you participate in shorting of Tether specifically? No. Like I said, you are looking at a completely different situation than the algorithmically backed UST coin. Now, in regard to stablecoins in general, should you be utilizing stablecoins? And that's really going to be up to you. I think from a trading perspective, it makes sense because you can trade for a stablecoin within an exchange and then use that stablecoin to purchase a different pair. That sort of makes sense to me. Personally, I don't see the point in holding any sort of stablecoin because with the, access to crypto.com or Coinbase, you can cash out and have it as a cash balance. You can put that cash balance somewhere else. And there's really no need for that. I think if you hold like a cryptocurrency, Bitcoin makes the most sense because it also has the most pairings. And you can just say to heck with all of the, all of the stablecoin areas, unless of course you are specifically trying to trade back and forth for something. So I've never been a huge fan of stable coins. I don't utilize them a lot. The only one that I utilize right now would be like SIG USD. But that's mainly because I'm just playing with that platform. Let's run the ad and then talk about mining profitability for the day. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. All right. Thanks to Crypto.com for sponsoring the mining show. I appreciate it. Today, we're going to be talking about my mining experience with Ergo and Neta. We continue to be on there. That may change on the 29th, of course, with the decrease of the difficulty on the Ethereum network. We'll analyze it and let you guys know. I'm down to 15 workers. I have 4 rigs turned offline. We are doing some maintenance, etc. Hopefully I'll be getting those videos out to you guys as well for farm maintenance. But even with 15 workers online, we're at about 10 to 11 gigahash a second. We do get all the way up to 12 gigahash a second at night when things cool down. Well, for the past 24 hours, we've done 9,900 neta plus the unconfirmed balance of 5,167. So if we go ahead and calculate that out, we have done 9,900 plus 5,167. That is 15,067 neta. To get that pricing, we'll go over to the Ergo Dex and we'll give you guys an idea of what we've done. So we've done 15,067. Just put it on Erg. We'll let that calculate. So, it doesn't seem to be calculating out right, does it? To 4 neta. To 4 Erg. Oh, 15,000. Oops, let me add in another. I was like, what's going on here? There we go. Hi. 15,067. It's not looking good, is it? So it's looking at about, well, this isn't looking right at all. I'm going to have to see how this functions out because it's, I think maybe they're having liquidity issues on Neta or something's going on with the DEX conversion. So we'll have to basically let this refresh, try it again. Let's do Neta to 15,067. Because that's saying 29 bucks. But if we swapped it to SIG, it says 57. If we swap it to ERG, it's saying 89. We may have to revisit this in a little bit because it should be more than that. Let's see how much we have in liquidity right now. Anyways, we'll try to get this figured out over time. Hurry up. All right. So Ergo Dex is being slow and not calculating outright. So we're just going to have to figure this out later on, I suppose. On the exact conversion. This is telling me the liquidity pools are low. It's not loading the pools though. Welcome to new projects and some of the issues you run into. Let's go ahead and hop into what to mine. We'll try to re-wrap up back onto that in just a second. So what to mine, we have an RTX 3090 with corrected hash rates for ZIL Hash, Kapow, ProgPow, and Firo proof of work. And then 10 cents a kilowatt hour. Cero's in first at $2.19 a day in revenue, $1.40 a day after power. Xano in second at $1.90 a day in revenue, $1.11 after power. Ravencoin at $1.87 a day in revenue and $1.08 a day after power. Ethereum at $1.75 a day in revenue and 98 cents a day after power. Gemlink at $1.68 a day in revenue and 99 cents a day after power. Conflux at $1.59 a day in revenue and 80 cents a day after power. Firo at $1.51 a day in revenue and 76 cents a day after power. Ethereum Classic at $1.45 a day in revenue and 68 cents a day after power. Flux at $1.33 a day in revenue and 64 cents a day after power. And Ergo $1.31 a day in revenue and 69 cents a day after power. And let's see, what is the Ergo one based off of right now? I would assume it's Kucoin. Gate.io. Okay, based off Gate.io. Net is losing value. Yeah, it makes sense. Yeah, Neta lost a lot of value right here. And we're uneven. So yay, Neta. We'll have to go figure out what's happening with Neta, and then I'll go talk to the team and see what they say too. It looks like the pairing obviously has gone pretty poor with Ergo at 272 in my liquidity pool. And it looks like Neta has basically dropped by about 50 $50,000 in total value on the pool, so you can't swap for it. That's what's happening. So it's a good catch. We were doing good for a while on Neta, and it looks like now Neta is definitely not doing good. That is why the price, or that is why the amount of Neta that we're getting is severely increased, because essentially the smart contract is still paying out. So to give you guys an idea, what happens is that the smart contract has 10 million tokens in it, like we were talking about before. And whenever we get paid out in Neta, which, you know, I've been swapping about 50-50 with Neta and Ergo, just me personally, and adding liquidity. What's happening is that we are essentially mining the block. We're still getting paid out the 122%. And the reason we've earned so much Neta is not because that the network's doing better. It's because Neta is doing poorly. So we're getting more Neta because it's going out, it's checking the price on Ergo, and then this is happening. So there you go. So that does mean that from my perspective, it would be splitting 50-50 and adding for the week, adding this liquidity has done some damage to my portfolio. Ta-da! So I guess that was a bad decision. Swapping just for Ergo would have been a better decision. We'll have to see what happens, and we'll have to figure out exactly what's happening with Neta. But glad we caught that today. Alrighty. Let's get into, what is Ergo at right now? Couple dollars. $1.98 still. All right. Cool. Let's get into, I'll do some more research and let you guys know what's going on there. Let's get into hash rates on the network. We have Bitcoin at 223 exahash a second. No change since Friday. What about Ethereum? Ethereum is a little up from Friday to 941 terahash a second. I think it was down to 910 terahash a second on Sunday, it says. On Friday, I think it was around the same, right? Yeah, 960. So it continues to drop, but the difficulty is not dropping because of the difficulty bomb. That should change between today and Wednesday, somewhere around there. Ethereum Classic at 24.34 terahash a second. No changes since Friday. No changes since Friday on Ergo at 13.34 terahash a second. What about Flux? Flux, we're up 0.1 mega solutions a second from Friday to 1.42 mega solutions a second. And Ravencoin at 3.15 terahash a second. I don't know if that's up since, let's go back on Friday. Yeah, that is up. That's up about 0.3 terahash a second. So what, 300 gigahash a second since Friday. Pretty good stuff there. Mining pool profitabilities. In the last 90 days, Crazy Pool in first, Ether Mine in second, F2 Pool in third. Last 60 days, Ether Mine in first, ZET in second, Crazy Pool in third. Last 30 days, ZET in first, Crazy Pool in second, Ether Mine in third. Last 21 days, ZET in first, Crazy Pool in second, Ether Mine in third. Last 14 days, ZET in first, Crazy Pool in second, Ether Mine in third. Last 7 days, ZET in first, Crazy Pool in second, Mining Pool Hub in third. Last 3 days, Mining Pool Hub in first, Crazy Pool in second, Crux Pool in third. And for the last day, ZET in first, Mining Pool Hub in second, Crazy Pool in third. ASIC miner profitability. Let's go ahead and hop into it. We have the L7 kind of taking the first spot below the IB link, of course, at $22.07 a day. The KD6 has dropped under $20 since Friday at $19.06 a day, which means the KD5 has probably dropped as well, down below 12 at $11.97 a day. And the S19 Pro is at $4.02 a day. But remember, there is the new firmware upgrade that you should be looking at from Hive On that pumps you up to basically under 3,000 watts and 138 terahash a second by all reports that I've seen there. So let's talk a little bit about mining Ergo and what we learned today on that before we really get into this more. The actual contract for Neta is clearly still working because our payments are working, but now can you not swap for it is going to be the question. And that is where, if I look at the DEX, this is concerning because, well, now, yeah, hold on. So now it's corrected itself. All right, let's see what's happening here. It rebalanced out on the pool. Let's go check on the swap then again. It did. Okay, it rebalanced out. All right. Well, something funky's happening, and I'm not sure exactly what's happening, but the pool is rebalanced out. I'm going to have to do some more research. It looks like the pool rebalanced out just fine. And then profitability or revenue for yesterday was $90. What I was worried about, here it goes, does it again. Does it again. So this is what I'm worried about. It keeps showing this. It didn't rebalance out. We refreshed again. And what we see is an imbalance between Ergo and Neta on the pairing. It looks like something's going on with either the API is not pulling correctly because it's bouncing back and forth. And we probably need to check the Cardano side as well. See, because we refresh and then it corrects itself. Either way, I think every time we've done this, if we set up, not that, but the Neta here and the Erg, it converts to 89. So that's kind of where we're at. I'm going to keep an eye on this and let you guys know what happens. I'm going to message the team as well and see if we can figure out what's going on. Let's get into questions and answers for the day. We kind of went way over as well. Let me pop this out too. And then we will go from there. So, super chats are never required, always appreciated. So, and the easiest to read, right? So that's why we answer them first. Tagging at Son of a Tech will turn the message orange and I'll be able to read it easier. Let's get into it. Oop, not desktop. There we go. Detroit Iris says, At Son of a Tech, Raven in first on most 6000 series GPUs. Nice. LZ says, As Son of a Tech, I tested Neta for 24 hours and it wasn't worth it. Only got 1500 Neta instead of 5 Ergo on 2 miners. We did cover, of course, beginning of the video, how long those confirmations are taking and so on. So make sure you go back and check your balance. Don't lose out. And definitely right now, you probably want to be swapping that Neta for Erg too. John Calvi says, At Son of a Tech, there must be some maintenance going on. I also noticed that the Nautilus wallet is not showing the dollar percentage. Yeah, there's something going on with it. You're right. It's not translating in the wallet either. Allow gifts. Interesting. I don't know how that works. All right. Gabe says, ask Simon Tech, what does adding liquidity mean, and what does it practically do for your coin and for your holdings? We've talked about liquidity a lot. Uniswap, we have guides on, etc. But liquidity, basically, when you add it, is the decentralized way of powering an exchange, because you control the keys to your crypto. You take 50% of one token, and you take 50% of another token, and you add it in and you lock it up. And that way, when people want to swap from one token to another token, they can swap over. So the concern is when that pairing gets off, right? Like ST, ETH, and Ethereum, where you have 80% in Ethereum and 20% of the pool is only in only 20% of the pool is ST, ETH. So that's how kind of the market regulates itself. But essentially what you are doing when you add liquidity is basically putting that up there, and then you get a portion of the swap, right? So you are essentially increasing your revenue. Theoretically, of course, the problem is, the reason I don't always recommend it is because, well, obviously, like in situations like this, if Neta was to crash, right, then I end up with like basically 50% of my holdings not being worth anything, right? If both crash, then I'm extra screwed, right? So you want to do it very conservatively, and not financial advice, obviously. Have you tried mining Cero? I mean, it's a very easy coin to mine from the algorithm perspective, but no, it's all concentrated on a single pool, and liquidating seems pretty difficult. Harvey says, ask Simon Tech, thoughts on incorporating solar and cell and research into the show. It'd be kind of difficult I gotta figure out, I have to learn more about it, really. Henry D says, thanks for the $5 super chat, says, thanks for the content. Was wondering if you could label dates and times recorded clips of the morning show, because it comes later and things change a lot. It already is. First of all the clips have a thumbnail with film reel on both sides, marking as a clip from the thumbnail perspective. Second of all, at the end of every single title, the number from the show it came from is on. So like we're on episode 142 today. So I think like yesterday we had a clip from 139. You'll be able to kind of tell where that comes from. I'm not going to add the full date because it's just going to mess with the algorithm. So that's how we denote it. We make it very clear that it's a clip. And then at the end of the video, so you'll know exactly just by looking at the title, which show it came from. Ted Bark, thanks for the $1.99 super chat. Let's see. Outside of a tech, mining Ergo convert to Meta is profitable. Yeah, it's been more profitable for me, especially last week. It was really, really good. It slowed down. Obviously today it looks like we did $90 in revenue, and we're down 4 rigs. So we're really, we're doing better than we would be on ETH. Even still. Zog Miner says, ask Simon Tech, I picked up 3 used RTX 3070s for $300 each and they run great. The used market is the way to go if you know what you're doing. Yeah, and I think 37s are a great option because they're GDDR6X, or 6 instead of 6X, which is a little bit more resilient right now. Fast Stack says, ask Simon Tech, is what Kevin O'Leary planning a good thing or a bad thing for crypto? Which one is he planning? I know we've talked about him last week about his predictions and so on, but I didn't know exactly what he was planning, or if there's something new. iRock says, ask Simon Tech, check out Bean Brothers here on YouTube for solar. All right, sounds good. Harvey says, ask Simon Tech, thoughts on buying a GPU with a 30-day hassle-free return, then returning it on day 29. You're essentially eventually going to get prevented from returning your GPUs, which then puts you in a bad position later on when you have a broken one. And I know coworkers that have done that. Village BC says, ask Simon Tech, if you were starting from zero, no rigs and no crypto, how would you approach entering the market now? I would be buying GPUs for mining and starting to get my rigs ready. Dragon says, ask Simon Tech, any thoughts on doing an op piece on the BAYC and Rider rigs controversy? Probably not. It sounds like something I need to cover on the morning show, but it's also just like NFT stuff. I wasn't aware of it. At Son of a Tech, but in what to mine website, Ergo is a lot down, even from the top 10. Yeah, you'll find that that's not translating true, though. So if I took my 11 gigahash, right? Let's just do it, right? So what are we at? It's not even 11. It's 10.88. So let's do 1088. Is that right? Is that 10? Let me think about this for a second. So no, that's 100 mega hash, 10,088, right? Something like that. Is that right? Calculate. Yeah. So we do 10,088. The profit for the day is 51.63. As we showed you guys already, today with Neta, we've done 15,067. We convert that over to Ergo, and that's 89.12. So it's way off. It's been way off the whole time. I have been trying to tell everybody that right now, you should not be paying attention to what to mine. It's not going to help you. It just isn't. You're going to have to start calculating these things out by yourself. You can look at what to mine like we do on the Daily Show to get an idea of like basically where ETH is at. That's pretty fair. But okay, so then if we did Ethereum, the translation of Ethereum for this was like 4.5 gigahash, right? So 4,500, right? Calculate that out. Ethereum would be 6532. We're doing a lot more on Ergo and Neta. We just are. And if you just try to stay hard on Ethereum and not playing with the markets or not, and you're just paying attention to what to mine, your farms are going to fail. At least until, if you hold it and you wait until it's very clear what the next project's going to be, you got that option. But if you're trying to cover costs and you're trying to find the most profitability, like sitting on what to mine is just not going to be the plan, guys. Like you're not going to be able to figure it out. You're going to have to play around with new things. You're going to have to get this all kind of moved around, right? So just be extremely careful. Extremely careful. I'm going to swap right now for some more Ergo. Hell yeah. Sorry, I had muted real quick. All right, so Harvey said, ask Simon Tech, if you run Raven on your cards with the same or just slightly more watts, will it generate more heat than ETH? And he took his ETH off cards, or took my ETH cards and kept memory tweaks the same and only adjusted the core. So basically, I'm already talking again. If you leave your overclocks the same, yeah, but then you're still hurting your Raven coin hash rate, right? So then that's going to adjust your profitability. You need to play with it, see what happens. I don't have an experience where even leaving it like that had left it either profitable or reduced heat enough, personally. Alrighty, ladies and gentlemen, boys and girls, we went about 30 minutes over. I'm going to be training jiu-jitsu in the evening now. Check out Locals. I'm going to be posting the Calendly link for the week. So make sure if you want to do a one-on-one time that you're signed up with Locals and that you are ready to utilize Calendly. If you are going to utilize Calendly, Zoom is the easiest. And then second easiest is Teams, because they directly integrate. They'll generate the meeting and all of that. I really don't like Google, to the point to where I'm probably just going to pull Google off as an option, because then I have to find your email, create a meeting, send the meeting. It's just not very easy to use, I suppose. So that's kind of where I'm at as far as that goes. And if you're interested in doing a one-on-one, definitely let me know. And I think that's it. All right. Likes, comments, subscribes, notification bells. And then I'll see you guys next Tuesday. Like I said, though, this whole month is going to be different. So I'm trying to figure out how I'm going to manage it. But I know, like, I'm going to be doing basically the whole evening. I'm going to be at jiu-jitsu, helping with the kids, and then rolling myself. That's going to be like 5 to 8 p.m. Every day. And then the morning show, that does mean we can go a little bit over. I'll probably be trying to figure out if I want to do a slightly later start time to make sure that the kids are sorted and ready to go. And then we'll still be working on videos and then the one-on-one meetings before that. So that's pretty much it. Thanks for watching. I'll see you guys next Tuesday.